You don't hear this talked about often, but Costco has a problem, and this problem is so serious that it's actually affecting the way that they make dividend payments. Now, let's go ahead and jump over to my dividend breakdown tab to see exactly what I'm talking about. If we come up here, plug in cost and hit enter, you can see all this data is going to automatically load in thanks to the help of the ticker data add-on in Google Sheets. And like always, if you'd like to download this spreadsheet and also get access to the ticker data add-on, then you can head over to tickerdata.com at the link in the description below. But let's go ahead and address Costco's big problem. Why is this not commonly talked about? Well, if we come down here, we can see Costco has inconsistent dividend payments. Now, why is this the case? Well, if you know anything about Costco, you know I'm actually joking about their problem. The problem is they have more cash than they know what to do with. And so as a result of this, Costco will periodically choose to pay out a special dividend, and you can see that was the case in 2023. In 2023, Costco paid out $18.96 per share in dividends, but $15 of that came from a one-time special dividend that Costco decided to pay out to its shareholders. Now, why is this something that Costco would choose to do? Well, keep in mind, the problem that we're talking about is the fact that Costco has more cash than they know what to do with. In fact, let's go ahead and pull in some extra data with the help of the ticker data function. Now, the first thing that I want to see is short-term debt. So again, we can just use the ticker data function to pull in the latest data on short-term debt and hit enter, and we can see Costco's short-term debt sitting at about $1.08 billion. Now, let's go ahead and compare this to cash and cash equivalents. Again, we just want to pull this in for Costco, and I'll come up here, select cash and cash equivalents, and plug in 2023, close the parentheses, and hit enter. Now, here's where things start to get interesting. Cash and cash equivalents for this company sitting at $13.7 billion, while the short-term debt for this company sitting at just $1.08 billion. So what exactly does that mean? Well, if we take this number and divide by short-term debt, we can see Costco's cash and cash equivalents can cover the short-term debt over 12 times over. This company has way more cash and cash equivalents than their short-term debt. Again, a great sign for the company, and it's probably one of the reasons they periodically choose to pay out a special dividend. Let's go ahead and do the exact same thing for our total current liabilities. We'll use that ticker data function. We'll just plug in cost right here, come up here and select total current liabilities for 2023, which is the latest reporting period, and we can see total current liabilities sitting at about $33.5 billion. If we do the exact same thing for total current assets, again, I'll just plug in the stock ticker Costco, select total current assets for 2023 and hit enter. And again, one of the things you'll see is their total current assets again can cover all their total current liabilities. So purely from a balance sheet perspective, this company has more cash than they know what to do with. So obviously one of the things you should be doing when you have lots of cash is doing things like reinvest back into the business, but this is something the company is already doing. They're already seeing massive free cash flow growth from opening new stores, and they realize that one of the best ways to reward their shareholders is with special dividend payments. So you can see this is something they did in 2015, in 2017, 2020, and of course they had the one-time massive dividend payout in 2023. So really, this is a great problem for any company to have. Proper capital allocation is so important for any business. And so if a business doesn't know how to properly use their capital, they should be paying it back to their shareholders in the form of a dividend. Now, this special dividend does not mean that Costco's growth is slowing and that they're not reinvesting back into the business. Both of those things are happening at high rates. We can see the 10-year free cash flow CAGR sitting at 17.4% and the 5-year at 19.18%. So there's clearly no problem with the company growing. So when we look at Costco, yes, they are trading at a very high forward price to earnings multiple of around 45.78. It is no doubt expensive, but when you start to consider things like the massive free cash flow CAGR that they've achieved, the low payout ratios, and the massive special dividends this company is able to pay out, it does kind of make sense why they tend to trade at a premium. So go ahead in the comments down below and let me know what you think of Costco and their problem. And like always, if you'd like to be able to download this spreadsheet and also get access to the ticker data add-on on Google Sheets where you can automatically import stock financials, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.